By the way, the Kart,
Yeah.
I was racing it the other day.
Yeah.
I will smoke you in that. Like
All right, let's go. Let's go.
in my head, I was channeling all the times we used to race that thing. I'm like,
Dude,
you're gonna want to race for sure. We'll set up some cones.
yeah.
So
Dude, I very confident that I could smoke you. So
oh God, we'll do like a time trial. So if you don't
Very
know,
confident.
before we start here, we have a electric go-kart that is, it's called the 9-Bot Pro, and we bought it on Kickstarter when it was coming out, and
they're outrageous.
we got, thank God, but yeah,
It's
we,
like I think I looked $2,300 or something.
I think we paid 12 because it was the Kickstarter thing. Otherwise, I would have never bought one of those. I don't see how they do that.
Yeah.
But so we're gonna set up backstage here a little time trial thing, and we'll have to come up with something to wager.
Let's go, man. I'm in this.
I have an
What do
idea.
they say? Send it.
I
Full send it. Is that what the thing is? Something like that.
Yeah,
seen that?
you got to send it, man.
Send
I
it.
tell you what I'll do. This is it. Before this is just because we're gonna do this. I know it's a bro show at the moment. Just hang out with me for a second.
Bro show.
I will wager. So I'm the only one that has my own bathroom. I'd be willing to wager my bathroom for a month.
For a month.
Yep. And you could just your bathroom. No, I won't go in there.
Okay.
I'll even clean it up and have it ready. But what
Okay.
you think about what I get if I beat you there? Because
Oh man.
I know that might be helpful to you.
Okay.
Anyways, welcome everybody.
I gotta think.
Happy Friday there. We're just a little talking before we start the show. Today we're going to talk about, and we make this quick. We're joining you in the Speakeasy, by the way.
Absolutely.
If you ever come to Jazz Wealth, this is a hidden room. So if you can find it, you can hang out in it, but it's otherwise hidden. Did you find it when you were here?
I think you showed me.
Yeah, see,
You
we
told
had
me.
to show
You told me
because
about
it's hidden. 4 ways to make income in retirement without going back to work. And I'm going to kick it off here with something that I am quite passionate about, but people are often scared about it, and that is selling covered calls against positions. And we have clients ask about this all the time. I'm going to say this, and I genuinely mean it. You take zero risk selling a call against a stock you already own. Did you know that?
Yeah.
There's
I'm
risk.
I am not the option expert. I will confess completely to that.
So if you own stock and you sell calls, you are essentially saying, hey, you can have my stock if you're right, but if you don't, I get to keep your money. That's the very, very simple way to say it. So there's no risk. If the stock goes down, well, you already own the stock. It was going to go down anyways. You get to keep the premium or what you sell the calls for. If the stock goes up, you may have to sell your stock. Well, that's not risk, right? You sell the stock, you just buy it back and start again. If the stock goes sideways, you make money. So advisors won't talk about this because we don't like to say there's no risk. But there's genuinely no risk to selling covered calls. So tip number one is, use that for extra income if you're into it, and realize it is not complicated. Don't let all the world of options scare you. Just focus on covered calls. Learn it, master it, do it in simulator mode, whatever it is. And my example is, I've had Disney shares. I've had 400 shares left over in this account for, it feels like forever. And so Disney's all over the place, and it fell last year with everything else. Actually, second worst year ever for Disney, by the
Second
way.
worst ever.
Yeah,
Yeah. Well, they fired the CEO.
40. Well, yeah, shouldn't have done that.
So-
Well, Bob Iger was a good guy.
Well, but they brought him back, didn't they?
I like him.
Isn't that who they brought back?
Bob Iger's back.
Okay.
I like him. I did
other
the master class with him. Bob Iger did it, and after like 10 minutes of the class, you see him start to like loosen up and get out of corporate mode. So you really tell a man by that. And so I like that. But I've had these shares of Disney for, God, 3 years, and I just can't seem to get rid of them. So I've been selling calls. And so his most recent go around, I sold calls at like 110, I think it was. And so for 400 shares, it was $3. And so that's $1,200 that goes into my account. I want to get rid of the shares, but so far it's not happening. So month after month, I just sell that. Sometimes it's been as high as 2,000. Sometimes at this point, it's 1,200. And there's no risk. I get to keep the money, or I get rid of the shares, or I just keep doing the same thing. So tip number one, don't be scared of it. Right? If you're one of our clients, we've done classes on this too in great detail to talk about it. So that's tip number one. And I've talked too much. Eric, tip number two?
Yeah, and I think the thing too with that is just realizing like you're selling a stock that you already want to sell. So
Yeah.
You you have the call on that is basically like, hey, I'm already wanting to get rid of it. It's not for everybody. It's not for everything, but it's a good one there. Second one, dividend stocks. Again, we talk about this. This is an interesting one because a lot of people focus on dividend portfolios and different things.
The kids.
Yes, yeah. The younger you are, the less you need just a dividend portfolio. But when you're getting later in retirement, depending on the strategy, depending on what we're doing, just an option for you. Option is
Bringing it back.
is to really look at a dividend portfolio if you just want some income, extra income. You can build a portfolio with dividends that's going to range anywhere from 6. Up. What do you say? What do you say? They're 10, even higher than that.
Oh yeah, you can get up to about 13%. Now you're probably going to allude to this, but taxes are the issue. So the higher you go in dividends, the lower your net return is probably way to say it.
You've got that. You've also got the problem of just the fact that if you truly just want the dividend, great. It could fluctuate. But if you're wanting to actually sell off funds and retire and live on more than just a dividend, you got to be really careful because the underlying stock will go up, will go down. That's a big thing that comes into play, and that's what a lot of people don't really take into consideration, I think, looking at these dividend portfolios. But it's actually tax-free if you just have dividend income and you're single and your dividends are, or your total income is $44,625 or under for 2023. And then if you're married filing jointly, $89,250 or under, then you would have tax-free dividend income. So that's an awesome one, but it's not for everybody. Not everybody has a brokerage account that they can do that with and make it work like that. It's just a cool one to think through the idea of.
Yeah, and I'll make my tip number 1A. The fact that there's actually ETFs that'll do the covered call selling for you.
Yeah.
So if you don't like that prospect, you'll take a little less money in exchange for this, but they'll sell the covered calls for you. And actually, I was just taking a look at all of the applicants for new ETFs, and one of the new ETFs is coming out as a string of them. It's kind of like a target date covered call ETF. It's going to blow people's minds. But right now, if you buy an ETF, they say, we're taking 100% of this money and we're going to buy the index and sell calls against the index or however they want to do it. Well, now they're going to have these weird ones where they say, we'll take 80% of the money and do that, and then we'll take 20% of the money and leave it in the index. So you'll get some income, some growth, which means it changes the tax profile there. That could be its own video in itself, but they're currently in application. They don't exist at the moment.
Yeah, and that's what people have to realize too is the tax implications. Options, anything like that, or even an ETF trading the options on the backside, that's counting as taxable income, not dividend income. So you got to be careful with how that's structured. Am I right on all that? I mean, that's how the basis of it is generally. You're focusing on those ETFs.
Oh yeah, the general, yes. There's ways around it. If you really want to get geeky, actually selling calls against the index instead of a particular stock or whatever it is. You get a special tax treatment there. So
there you
actually you don't pay on the entire amount of the gain from the premium. It could be as low as a third. So there's, and the ETFs all do that too, but extra tax strategy there. Tip number 3, right? This one will be for me here. We're at a weird point in time where you ever hear the yield curve is inverted, the yield curve is steepening, the yield curve is flattening. What on God's green earth are they talking about? If you were to plot the 30-day treasury, actually they don't have those anymore. If you were to plot the 90-day, the 3-month treasury, 6-month, 1 year, 2 year, 5 year, 10 year, plot them all on a chart and then connect the dots. The way you connect the dots is what we're talking about when we say yield curve. And typically the way it works is, and I'll go this way because you're seeing it backwards. Typically the yield curve starts from low and swoops up. The longer out in time you go, all the way to the 30-year bonds, it'll swoop up. An inverted yield curve is one that starts up here and swoops down. And what that means is there's more money for you. There's more money to be made in the short term than the long term. What it means for the economy is not good because it means that people are scared to take risk outside of right now. They see the risk as within the next 3 months, 6 months, 1 year, and therefore they charge more for lending money. They say, well, in 10 years, everything will probably be fine, so we'll charge less. Well, that's a bad thing for the economy, but for you, the investor, it gives you the chance to maybe ladder some bonds, ladder some maybe CDs, depending on your bank. But if you ladder those bonds in a 3-month, 6-month sort of time period, you're taking the bigger return now. Granted, it's annualized, but you're taking the bigger return instead of saying, I'm going to buy 3-year bonds and I'll stagger them over whatever. now's a different time. You can actually make more income by laddering shorter term bonds or treasuries.
Yeah, yeah, and I'm gonna go with the 3A on that one. Just the idea that
Wow.
you mentioned CDs as well. I know
Yeah.
a lot of people are talking about CDs again with rates coming up.
Yeah.
But just the simple fact of a high yield savings account that go into that same category. I mean, there's some high yield savings. I'm hearing 3-4% out there, depending on where you're looking at, what you're doing. That's you've got cash. If you're not looking to do a strategy with a bond ladder or something like that, then you want an easy way of just getting a little extra on that. So that's an option for you. And then
think of it as we should almost put together like a chart. So you want more income. The easiest thing you could do, a high yield savings account. At least it's better than it was, right? The next thing you can do, maybe ladder some CDs, ladder bonds. The next thing we should do something like that where you work your way all the way up to a diversified portfolio with covered calls spread across all of them and hedged with put buying every now and then. So you can really get geeky with it, but don't let me scare you, right? You just work your way up the ladder until your stomach goes, ugh, I don't know about this. And that's it.
yeah. And then okay, so number 4, last one is well, some people aren't going to like this one. Cut off the kids.
Yeah, get rid of them damn kids, man. I'm all about it.
It's a gotcha moment. It's not that it's actually going to generate true income, but what it is going to do is free up expenses. I have been blown away at the number of people I talk with that are looking to retire and kind of tight. And I get it. If you've got a lot of money, you want to help your kids out, that's amazing. But if you're trying to get into retirement and you're trying to carry the 26-year-old that should be out there now working, getting the job,
Yep.
it's time. You gotta
Get rid of them.
free them and focus on making sure, hey, I can make it. Later on, maybe you come back and you help them a little bit, but this is their time to shine. This is the time for them to be really working, putting the money away. So, if you're carrying them on cell phone bills, insurance, things like that, now's the time to really start considering, letting that go a little bit, having some income. I know that's gonna make some people ruffle some feathers on that one, but
you can give me all the grief you want there, but I come from Bruce Williams days where tough love in the financial world, and there comes a point where you almost have to blame yourself. Like your child is not prepared, and they can't pay for their cell phone bill, or they can't do a little research and maybe look for some scholarships in college, or apply for grants, or do some internships. What does that say about you that you haven't pushed your kid that hard? So that was a tough comment there, but
yeah,
I mean, it's true. If it's getting in your way, I mean, for God's sakes, like let's have that tough talk, man.
that's it. And that's look at this. I gotta move up here. What was I gonna say? And that's how you make money. I don't know. So somebody even said on your show, didn't they? That yeah,
It's a stupid comment.
The stupid cup flip.
Hey.
So hey, I just appreciate you watch till the end. If you stay for the cup flip, appreciate that, because it just means you watched all of it. So you didn't click off. So.
I will tell you, you gotta step it up a little bit. Like, we need some really good ones now.
I'm gonna have to figure this out. Maybe I do like a dad joke when I flip the cup. I don't know, something cool.
Okay, yeah, I could deal with that, but it's got to be different. But every time, just like something that's almost a joke and throws you off there.
That could be a good one. Yeah, dad joke, and then the answer is the cup flip. All right.
Well, we're gonna go take a nap now and close down the speakeasy here. Hope you enjoyed it, and a little change of scenery there. Have a great rest of your weekend, and I'll see you later on the Jazz After Dark, huh?
All right.